Good morning and welcome back to Almus Market Mornings. A relatively quiet day yesterday as the West remained closed on account of Thanksgiving. But let's go over a few important updates. Tokyo region's inflation was firm once again, and this is an important factor to take into account for the overall country's inflation number. It also helps us determine where or when the BOJ will start with its rate hike action. There's an OPEC Plus meeting coming up this weekend. Now, oil prices have been quite subdued in the recent months. The focus will be on whether they hike outputs for the next year. Domestically, Indian benchmark indices hit fresh all-time highs yesterday after almost 14 months of consolidation. Good morning, JK. A bit of cheer for the Indian equity bulls. Is a sustainable risk sentiment building up in the Indian markets?
Good morning, Swaraj. Yes, if you go by what most of the large investors are saying, I think it is probably time for uh, some more dedication of funds to the Indian market by the large players. I'm talking about the FIIs as well. And of course, the domestic market has been, steadily uh, positive on the market, despite some of the negative, vibes coming out of the earnings downgrades and, even the economy slowing, etc. But I think after such a long period of consolidation and some correction in the prices as well, even as the most global markets had a big run, I think possibly now the relative valuations might at least make them reduce their exposure to the other markets where there is a concerns about the valuation and rededicate some money to the Indian side. So that is a very likely scenario. And breaking into new all-time highs and staying above it for a couple of days also gives more confidence, definitely. Yeah. Otherwise, on a day when U.S. market was closed, other regional markets were relatively quiet to steady. And there was no fresh drivers for the market, of course. The stable environment is also supported by expectations that Fed is going to cut rates again in December, 85% probability as per market. Possible easing in the global geopolitical concerns as Russia and Ukraine are engaging in peace talks once again. Of course, the one emerging trend in the last few days is the rotation of investor action to more cyclical and core economy sectors away from the tech sector, where the valuation concerns remain. So, all these have actually supported the markets to be steadier. And in fact, a recent poll projects that major global stock indices will again trend higher in 2026, and some expect a repeat of the good gains seen so far this year as well. So I think going with outlook being steady and also policies being supportive, even Japan unlikely to hike rate despite these today's data, which came slightly stronger, augurs well for the risk assets. And of course, Japan is planning a huge fiscal stimulus as well. Otherwise, going into Friday, it's a very busy day in terms of data. We already had Japanese inflation number, and of course, then we have a huge number of data from the German side, retail sales and unemployment, inflation number from France, Spain, and Germany, and of course, India's GDP growth for July-September quarter, and that is expected to even inch up to 7.5, 7.6% versus 7.8% that was seen in the initial estimates. Sorry, for the previous quarter. Now, as to the dollar is concerned, the divergence in the performance has continued after expectations of Fed rate cut in December has risen. We have seen greenback stumbling a bit, and gains have been seen in Euro, GBP, and yen to some extent. But commodity prices have been gaining quite a bit on the back of risk sentiment improving, while high yielders are steady holding their lofty levels, supported by carry trades. Chinese yuan has been moving, steadily stronger, but no big, rally or if, rise has been seen in the currencies market. Still await a host of pending data from the US to get a sense of, what's going to happen on the monetary policy. One very strong data, and then again the market's expectation on rate cut can change as well. That's why the market is really holding its breath. In the meantime, the dollar index has failed to hold on to gain above 100 for the second time, and again trading below the key 200-day moving average mark as well. Amid all this, rupee has crawled towards almost towards a new all-time low, seeing persistent demand ever since we dipped to 89.05 a couple of days back. That was thanks to RBI intervention. Yesterday's buying was led by corporates, both for their imports, and now recently what we are seeing is the corporates are also started to cover the foreign currency liabilities. The dent in any expectation that rupee will rebound near term after it broke above 88.80 has actually increased the dollar buying pressure, and it's imperative that the central bank continues to fill the gap in demand and supply. Data also shows that in the last 3 months, since September, RBI has spent as much as $26 billion to defend the rupee's steady fall. But for their intervention, probably USD INR would have been much higher. Yes, market awaits today's data on GDP. However, I don't think not much impact can be seen from the data, even if it comes stronger. Nor the Nifty hitting a new high is going to change the trend of the rupee, because what remains key is whether we're going to get the capital flows. I'm actually wondering whether the authorities would be slowly embarking on some policy measure to enhance the capital flows, which remains the key for the rupee. Otherwise, I think a gradual depreciation is the natural course for the rupee. Thank you.
Thank you, JK. Overall, seems risk sentiment is improving for the Indian markets apart from the rupee. Rupee continues to be a laggard and continues to trade on the weaker side. On the other hand, Chinese yuan has been steadily moving stronger. So that's also an important thing that's happening. Otherwise, busy day for data today. We have got a lot of inflation prints from Germany, France, and Spain, and also India's Q2 GDP. Globally, markets continue, dollar continues to trade weaker. Commodity prices have gained on the back of risk sentiment improving, but relatively it's been quiet because of the holiday in the Western markets. That's it from us today. Thank you for listening. Have a very good weekend. We'll catch up on Monday with the fresh round of updates.